I started my career back in the late 90s. You saw the hype cycle in the AI boom and bust.
In cryptocurrency, most people make decisions, especially retail investors, based really on hype.
If Ethereum is going to become dominant, it kind of has to hurdle this hump.
No one really knows what the crypto value is.
The value of something is really defined by the transaction.
Sounds like an example that big waves gonna rise all ships, small and big ones. Well, welcome everyone to my podcast. Today I have a very interesting guest. How do I call you? Dr. Starkweather?
Technically, yeah, I suppose
I guess
is.
not technically. I think it's what it is.
Yeah.
But are you a medical doctor?
No,
Collin?
no. I have a PhD in economics.
So can you explain to the audience and to me why the people in PhD who have PhD in economics are called doctors?
Because the degree is technically a doctor of philosophy
Okay.
in whatever the subject is, whether it's chemistry or economics or geography. There are PhDs in geography.
All right.
It's an honorific. But when people ask, I say, well, I'm not that kind of doctor, because whenever you say you're Dr. So-and-so, they think MD.
Got it.
And God forbid your name is called on a plane when somebody is having a heart attack.
I know, right? Hey, do we have a doctor here? He's like, yeah, I'm a doctor in economics or geography. I can help. So, Collin, can I call you Collin?
Sure.
Yeah. Collin,
please.
So tell the audience about yourself a little bit. You're a very interesting figure. To my knowledge, you have a very depth knowledge of economics, and that's what I really want to talk with you about today. But you also have spent part of your career in AI, in cryptocurrency, and actually in different fields, including bankruptcies of big companies. Just give me a brief overview. Who are you?
Well, first I should say thank you for having me.
Of course.
It's a pleasure. I think you focus a lot on crypto. So, but I think my career has been in a variety of areas, some of which touch on crypto, and many of which do not. I could start by I could start with my most recent endeavor. So I've been working as a data scientist and economist throughout my career, but most recently I was a chief data scientist in an AI startup. And that was in the legal tech space at a spin-off from a law firm that was developing some AI-based software. And then decided at some point, well, it's time to really hang out my own shingle.
Okay.
So I started my own company recently. We're still in stealth mode. So
what is it focused on? Can you share a little bit?
No.
Damn it.
Sorry. But it's exciting. And
Well, at least the audience is going to know that this is not a paid promotion.
Yeah. But you'll have to have me back on when we come out of stealth
We're definitely going to have to.
Yeah. So, and that's a bit of a, I would say, a bit of a coming home for me, because I started my career back in the late 90s, and you might remember the dot-com boom.
Absolutely.
Where when I was in graduate school, I took a little break. And in the PhD program, there's a status known as ABD, all but dissertation.
Okay.
Which, if you're not familiar with it, is when you've finished all your classes, and really all that remains is to write and turn in that dissertation, and defend it before your committee. And, you have a number of years to do that. And whatever you do between the time you finish the classes and the time that you turn in the dissertation is up to you, so long as you get that dissertation in. And so that was in really the ramp up to the dot-com boom. And then in the midst of the dot-com boom. And so I took a little bit of time out while I was working on my dissertation to join the dot-com boom.
How did you join the dot-com boom? I'm just curious.
So I had been. It's a bit of a funny story.
Oh yeah, we'll like stories, especially funny ones.
My wife at the time and I had to go to Italy to see a man about a Ferrari.
Okay, that's a really interesting story. Go on.
Yeah, so she was in graduate school at the time, and her advisor wanted to get a very exclusive Ferrari in Italy.
Okay.
And so he, I believe it was called a Dino. I'm not a Ferrari aficionado, so yeah, I can't say, but I think it was called a Dino. So anyway, he rented a villa and then invited some of his students. And so we thought,
which school did she attend?
University of Colorado.
Okay.
Yeah.
Interesting.
Which is where I went to school as well.
Okay.
And so we decided to go on this trip because, might as well. Somebody rented a villa in Tuscany. Why not?
To choose a exclusive Ferrari.
Yeah.
That's okay. I'm just curious where it's going.
Yeah, well, so needless to say, fabulous trips to Tuscany are not, do not fit within a graduate student budget.
Right.
So at that time, this is the first time I'd ever done anything like this. I said, whatever, we'll, put it on credit card and then we'll deal with it when we get back. And so when I got back home, I thought, okay, so I got to figure out a way to, pay off this trip. And so I started doing some consulting, and a headhunter at that time recruited me and said, there are all of these dot-com companies and everything's going crazy. You really got to at least talk to some people. And my dissertation was on network effects and externalities.
Awesome.
Yeah.
So network effects was it 2001 or when was it? Or it was 1990?
No, it was late 90s. I think
Late
98,
90s.
99. Yeah, and so at that time the trajectory was up. Right?
So when you say you joined the dot-com bubble or boom, did you get an opportunity to benefit from it? Because what the dot-com bubble is, or boom, is famous of, that some people got very rich and some got very poor, right? So on which side were you?
So this is a bit of a roller coaster of a story, as were many dot-com stories. I'll give you the ending, though.
Okay.
So the ending is the company that I joined eventually IPO'd, I think, around 2011. And their market cap was just shy of $1 billion.
Wow.
So the company did remarkably well. I was there through 2001. But as I said, I was ABD at the time, had a dissertation to turn in. And I joined the company, expecting it to be a relatively short window, knowing that I had my dissertation to write. For me, it was great because, I got to experience network effects and externalities firsthand.
In real life.
Yeah.
So was it a part of your dissertation?
Did
you use some of your experiences that you put in it, or it all has to be based on the research you've done before?
No, it was it absolutely informed my work at the time. But the dissertation was very, I should say, theoretical. My advisor at the time referred to it as theory with numbers because I did kind of a very applied approach to a theoretical piece. And but of course, it gave me a firsthand account of how network effects and externalities work in practice, how people think about them, not just in academia, but the sense that people have of the dynamics that they're dealing with. And now, I can bring that right back around to crypto because I think oftentimes business people are ahead of the academics. The academics have to take in all of this information and distill it, and that distillation process can take a while.
So 2017, we have a similar type of bubble, a boom that happened in 2000s, which was a crypto bubble.
Right.
There has been a lot of ICOs, a lot of different tokens came out. And that was a few years later after the Satoshi white paper got published, which was basically a core of cryptocurrency industry in general.
Yeah.
And I think the 2017 really showed how important the network effects are. And that was probably the next use case after the social media companies, after the Facebooks and Twitters and so on. So what do you think happened during 2017, 2018 and going forward with crypto, and why it got so popular and why it spread so fast across the world?
I think, there was the hype cycle, right? I think the hype cycle is certainly tempered. You see the hype cycle in full swing. And I think a lot of the initial crypto adoption and much of the popularity was driven by that hype cycle. But network effects and externalities are inherently an increasing returns effect, right? Let's talk a little bit about network effects and externalities, because that's really what drives the value in crypto. When I started, thinking seriously about network effects and externalities, that was a time when Microsoft was ascendant. They were actually facing antitrust scrutiny from the Department of Justice. You might remember, back in the day, I think it was Judge Jackson who originally ruled that Microsoft was to be split into two companies, kind of an OS and an application firm, because of whatever alleged bad acts they had committed from an antitrust standpoint. Well, and I worked on a lot of those cases, actually, over the course of my consulting career. Those types of network effects, right, are a little bit different than what you see in crypto. I think a more apt analogy might be, let's say, a dating website. Right? Like, Match.com or whatever,
Right.
Tinder or whatever, right? If you are going on to a dating website, what is it that you actually care about?
To find a match, I believe.
Find a match, right? And so you want to go to the website with the biggest pool of candidates.
Right.
And so it's not actually the app on your phone that's important. Right? The app has certain features, and some of them are convenient and some of them are not. But what really matters is the pool of, potential matches out there. And that is the network effect, right? Or externality. People use the terms interchangeably, although in economics there's some distinction between them. But that's the network effect or externality. The value comes from the other people in the network, right? And so now looking at crypto, so let's think about that in terms of crypto.
So the value comes from the people who use it.
Yeah. So if let's say Satoshi had released Bitcoin, right?
Then the Bitcoin price would go down and the whole thing wouldn't be so much of value, because now Satoshi is a person who is known, has a lot of coins, and basically it becomes more centralized.
Well, let's go to the extreme case, right? Oftentimes when I'm trying to think about problems, I try to think about the extreme cases because they inform, reality. So let's say Satoshi issued his white paper. What year was that? 2008.
Yes, I think so. I should know that, but I think it's 2009, I guess.
Yeah, I think of it as a Halloween paper, so I remember it was on Halloween, whatever year it was. So let's say he released his paper on Halloween and nobody was paying attention.
Right. Nobody was.
Yeah. Well, somebody was, right? Because, in the extreme, let's say he releases his white paper and nobody
Reads it at
buys
all.
nobody buys or generates any Bitcoin. Then what's the value of Bitcoin?
Well, if there is no users, no effect, then probably there's no value.
Yeah, you could say
Someone else, like we have other examples with other coins, right? It's like I can release, Sergii coin or Collin coin, but if it's not used, who cares, right? That's the point.
Right. And you could say, in some sense, it's not even zero, it's an undefined number, right? Maybe there's somebody out there who wants Bitcoin but just hasn't heard of it.
Right.
So, the value of something is really, defined by the transaction.
Okay.
Right? And so you need somebody on the other end of that transaction, or it's not or there is no transaction, right?
Right.
And so let's now think about Bitcoin, right? You need people to transact with. Without those transactions, there's no way to really assign value. Right?
It's an interesting point, and I've always been actually arguing that case with a lot of people because nowadays Bitcoin is considered more as a digital gold,
right?
Where you just hold Bitcoin and it will become higher in price. It will appreciate over time because of scarcity and uncertainty and belief, I believe. But at the same time, the vision, the Satoshi's original vision was Bitcoin to be a digital cash, right? So at this point, there's not that many use cases for Bitcoin to be used as a digital cash, but there are more use cases for it to be used as a digital gold. So to your point, when do we see that network effect? Like how many transactions do we need to have? Is it a part of, do we see Bitcoin as a digital money here, or having a transaction in the sense of a transacting value also is an example of a network effect?
So how do you distinguish digital gold from digital cash in your mind?
Well, digital cash is something that we use as a legal tender to buy and sell goods. Digital gold would be something that you hold for a longer period of time so it can appreciate value.
Okay, so and you're really talking about different functions of money, right? So money in one sense is a store of value.
Okay.
Right? In another sense, it's a medium of exchange, right? I'm going back to kind of...
Awesome. Let's just, that's what we need. So, interesting, just a small side note. The reason I really wanted to have a conversation with you, because you are a distinguished economist, you have a PhD in economics, and you've done a lot of work in this field. And I want to hear your opinion versus the opinion of the people who have 50,000 subscribers on Twitter and they have no damn idea what economics is. You know what I mean?
Yeah, I'll try to give you a hype-free answer. Right.
So the matter of fact is that all opinions matter.
Right.
But when it comes to big decision making and investing, for example, in cryptocurrency, most people make decisions, especially retail investors, based really on hype, based on influencers who they read, who they follow, but they don't really do a deep dive in the basis of economics of certain underlying asset, as you would do in any other asset. For example, on a stock, Apple stock, or Microsoft stock, or any other stock, you would actually analyze, do they have earnings, what the products they have, and so on. In crypto, it's like, which crypto you have? This one, Sergii coin. Great. I'm gonna buy it as long as it's gonna go up in price. So, opinion you have here is very important and valuable for me, and I hope it's going to be very valuable for the listeners as well.
So I think we might talk about distinction.
I'm sorry, the side note became too long. What we were discussing is that what I'm talking, like when you asked me about digital cash and digital gold, you said this are just two definitions of money. These are just features of money. So they are basically the same. That's what you're saying?
Well, no, I think there are different functions of money. And this is going back to economics 101, right?
Right.
And so the value of money comes in these different forms, right? To some people, it's a store of value, right? To other people, it's a medium of exchange. To other people, it's something else. But now I'm going to take you in another direction, right? And that is, let's talk about market efficiency, right? And this is a really important concept, I think, in crypto and all markets, especially, when we're talking about securities markets, exchange traded products, those sorts of things. So you're talking about, Jane and Joe crypto investor, right?
Right.
And they're following the hype cycle, and they're, scrolling through their phone, reading the latest, feeds on whatever's happening in the cryptosphere. And they make decisions based on that. Maybe they have some kind of mental picture of things, some algorithm they follow. A lot of people who trade on the street do that, right? In some form or other, professional traders, right? And I've worked on a lot of trading cases, actually. A lot of my book of business and my consulting career has been looking at high frequency trading and, alleged malfeasance, shall we say, in, the regulated markets, exchange traded products and that sort of thing. Okay. So now let's separate Joe and Jane investor from the market, right?
Okay.
And this is really important. So, Jane and Joe investor, let's call him speculator for crypto, because a lot of people, for them, the value is speculative in crypto. Where is it? It's not what's the value today, but where do I think it's going to be tomorrow?
Correct.
Right. So they form a collective intelligence of sorts, right? And together, all of that information, right, is brought together in the marketplace and spit out as a price, right? That is the transaction price that we all view, right? If you go on to, whatever website you're looking at that tracks, crypto prices, and, I don't know if you're looking at the Gemini Bitcoin or some other, I think,
right. Yahoo Finance, Robinhood, any of those, right?
Yeah. And, I think a lot of the indexes or the pricing out there comes from an amalgam of, different exchanges. But anyway, that price that you're viewing is really this large and very complex series of interactions, right, that lead to a single number.
Okay.
Right? Okay, so now let's talk about market efficiency, right? I mentioned market efficiency earlier. So how close is that price to what you might call a true price?
We do not know. I guess we don't really know.
Well,
maybe
how do we know?
It is? Maybe it is the close price because that's what people are willing to buy.
Yeah, maybe it is. Maybe it isn't. Right? And who's to say it is? Right?
The market, those Jill and Joes and everyone else who is going to be buying that. That's who says what the price is on the market right now because they're buying it at that price. Is that so?
Yeah. The key here is, if you're looking at the market price and you say, well, there's been some impact on market price. How do you know that the impact is meaningful? Well, in an efficient market, you have frequent transactions. You have a great deal of liquidity. You have many, many buyers and sellers. And so that price reflects some sort of, collective intelligence. You can think of it. In an inefficient market or a market in which there's very low liquidity, like, let's say, during the credit crisis when, Lehman Brothers went bankrupt on September 16th, 2008, if I remember the date right.
No one was buying that debt. Right?
Yeah, nobody was buying the debt. Nobody was, the debt markets just completely froze. And so what is the price, right? Is the price, if the last traded, security was traded 2 days ago, well, what's the price today? You don't know, right? And so you need some liquidity in the markets to be able to say that collective intelligence, right, is producing a price that in some way is reflective of what the true price, may be, right? So now let's go back to crypto.
I just want to piggyback on this a little bit. There's more liquidity to both buyers and sellers. And if there is more buyers than sellers, that's how the price goes up. So that contradicts a little bit of what you said in the beginning about the Match.com, that if there is more people who use crypto, then it's also a collective intelligence. So is it the case that there's more collective intelligences here, and like it just like a network effect is in buying and selling, and the network effect is also in usage of crypto?
It's in all of the above, right? And I think, if I were
So they
to,
all combined, they define if this particular crypto asset is useful or not. So they define it by using, they define it by buying and selling. So basically the liquidity, that's all what matters here.
that's what matters if you're talking about whether the price of crypto reflects some underlying true value, right? And so I think a lot of crypto skeptics, I as an economist, I consider myself, orthogonal to opinions of a political nature, but like there are skeptics out there. There are those who buy the hype. There are those who, who see value in the product along a variety of dimensions. There's some merit to all of that, right? But what really matters is, are there people out there transacting the product?
And transacting, you mean buying and selling, not only using.
Buying and selling, not only using. The skeptics, something I've heard frequently among skeptics is that, there's no kind of killer app yet for crypto. There's no real value in crypto.
Right.
Right. I think Warren Buffett has been highly critical of crypto.
Correct. Yeah, right. He says it's a red poison. It doesn't have any value. It's you buy this asset to sell to someone else at a higher price in the future.
Right.
So what do you say to that argument?
So who knows in the long run, right? But in the short run, what we can say is we can observe the price today, and we can ask ourselves, is the market efficient? Right. And
so if the answer is market is efficient, that's the real price of the underlying asset at this point.
Yeah, there is real value there. And that's something I saw, for example, in a lot of the, let's say Microsoft and other antitrust litigation, that came out of the, 90s. And that was when network effects were really starting to be recognized, right, and understood. Is that, there's if you're talking about Windows, that's a different kind of network effect than crypto, right? Because the network effect there, you're dealing with this kind of two-sided market where you have a producer and then you have, consumers of an operating system, Windows. And Windows has some intrinsic value because it helps you do stuff on your computer.
Right.
Right? But it also has, it also brings some network value in that, not only can you connect with other Windows users perhaps better. This is more true in the, early days of networking, when networking was a little more complicated than it is today. But you can connect and work with people on Windows better. But also, you have learning benefits. If my father is using Windows and I'm using Windows, and he has some technical problems, I can, go in and help him out with those, right? And so there are a variety of different network effects. But the point is, the network effects are real value.
So that's what the value.
Yeah.
So basically, okay. So basically, I came back from a Bitcoin conference a couple of weeks ago. And on that conference, a lot of people were discussing the fact that Bitcoin is valuable and will go in price because A, it's a sound money, B, because there's a group of people behind it who believe in it, believe in its value. So that alone sounds like is enough to bring the price value to bring the value of an asset up, as long as it's being used and people believe in it.
I would not say bring the value up. The value is whatever it is.
Yeah, whatever it is
right?
on the market.
Yeah,
Yeah.
you know, I
But
mean,
it could exist, right?
Yeah.
So it will not disappear, basically, as long as there are more users.
Yeah.
That's what network effect is, right?
Right.
Like Facebook is Facebook because it has 2.5 billion users
Right.
monthly, right? Like, and probably the app is not the best, but users are there.
Yeah. Yeah.
Right?
Yeah.
And that's the fact. And I think the same is in Bitcoin. Bitcoin is not the best cryptocurrency to transact value. There's way more faster currencies, Ethereum, Solana, Tron, so many other different networks. But at the same time, the reason Bitcoin is so much popular is because it is a sound money. It is decentralized, and the founder or founders or a group of people who created it are not there anymore. No one can change it. So it's like basically money of the people. Would you agree with that?
Well, I'll characterize it a little different. I'll bring us back to network effects, you know, which we started talking about originally in their more pure form, right? So again, network effects are where you derive value from other people being on the network, right? You maybe don't derive, you know, value directly from the features. So if you're looking at Ethereum, I would say, you know, Ethereum has more features than Bitcoin. Would you agree with that?
Yes.
Right? And in fact, the Ethereum platform is, you know, I find it very cool. It's a really exciting and has been a very exciting area, more exciting to me, honestly, than Bitcoin, you know, but I'm
Oh my God, we have to end this podcast. I'm just kidding. Continue.
But you know, I think you know, as a snob,
that's the point. So
purist,
Ethereum
right?
does have a lot more features, but yet the price of its asset is not that high. Number one. Number two, those use cases can be replicated by other cryptocurrencies, such as, for example, Solana.
Yeah.
But Bitcoin was an asset that people tried to replicate. Litecoin, Bitcoin Satoshi Vision, Bitcoin Cash, and yet no one was successful, even though the technology itself was created. All those that I just mentioned were created, but they're not used that much. So there's no network there, no people who believe in it. So what does define what will make one person to participate in Bitcoin versus Ethereum? Why would I go and buy Bitcoin and use Bitcoin versus Ethereum?
So in my
Since
case,
it has more features.
In my case, at one point, I was running an Ethereum node out of my living room on a spare server, and I did it because it was fun. It was interesting, right? But one of the things that came out of my dissertation and the modeling that I did was a real feel for how network effects tend to structure markets, right? And one of the things that was very clear from just the math of network effects, if you specify those effects mathematically, in an appropriate way, you can kind of model, alternative scenarios and kind of see how the markets move when you, perturb the markets somehow. And one thing that was abundantly clear to me as I was modeling the network effects in the research that I was doing at that time was that you tend to have concentration, right? And you really don't need very strong network effects at all to drive concentration in the industry. And so let's say you have let's say relatively mild network effects or mild to medium network effects, let's say. And, abstracting from everything else, let's say there's a market where people have roughly comparable features. You would typically observe a market where, and I'm just pulling some numbers out of the air, 90% of the market goes with one producer. 9% of the market goes with another producer. 0.9% of the market goes with another producer. Et cetera, et cetera. And so you see, dominant producer as it were, in the marketplace, and then a lot of fringe producers. And you see that in, crypto, right? You see Bitcoin is the kind of predominant currency out there. And then, Ethereum, still number 2, I believe.
Correct.
And so on and so on. And then you have kind of lower market caps, right, as you move down the chain. And, that progression, goes pretty quickly, right, from, the market cap of Bitcoin down to, bit
right.
players, which might have in the millions or tens of millions or what have you, right? And so that structure of the market that you're looking at is very much driven by those network effects, not so much the features of the product. Now, there may be, for example, Ethereum comes up with the killer crypto app.
Right.
Right? And, well, what would that look like? Well, if Ethereum is going to become dominant, it kind of has to somehow hurdle this hump, right? It has to have a feature that's not only better than Bitcoin, but so much better than Bitcoin. Mm-hmm. And when I'm talking about Bitcoin, I'm talking about whatever features Bitcoin has, but also the network, right?
Yeah, the network, I think, would going to be the hardest part to overcome.
Exactly.
That's the hardest one here.
And so if you
right, because the features are not the features are already there.
Yeah.
But the network, the belief in Satoshi white paper, the belief in the price going up, the belief of this to be a sound money is so hard to overcome with any other cryptocurrency. I think it's too late. I don't think anyone will be able to do that.
Well, if it does happen, right? And you never know. I mean, I've been
right. Let's just let's assume.
Yeah, I've been observing markets, whether crypto or otherwise, for throughout my professional life, and I never write anything off, right, as a possibility. So and when MySpace was ascendant, everybody thought, nobody's ever going to supplant MySpace. And then, Facebook came along,
Right.
Do you remember WordPerfect?
Right.
The word processor. Everybody said, well, WordPerfect will never be supplanted. And then, Microsoft
Even Google
Word.
right now. Right?
Yeah.
The Google is being supplanted with OpenAI.
Yeah. It's being challenged for sure.
It's being challenged for sure right now. So,
and something that was really obvious to me from the time that I spent working on, many antitrust and other cases in the technology markets, is that even large established incumbent firms, right? They are in the technology sphere, right? They recognize that dynamic, and they are constantly looking over their shoulder. And worried about the next big thing, right?
So let's talk about next big thing.
Yeah.
Crypto is not that hot anymore. It's 2017. It started. I think that's when it's really started. The cryptography as an industry has been around for decades, but the use cases started coming out in 2017. 2018, we had a couple of bubbles that popped. They were small, so they didn't really influence anything at all, and we are back to where we started, right? But I think the next big thing that we're observing, and I really want to talk with you about it, is AI. And when I talk about AI, I really talk about artificial intelligence. AI, I think, in my opinion, has been around as well for quite a long time, but people were calling AI any type of machine learning, right? So what is AI for you? How is it different from machine learning? And are we really in AI era, in artificial intelligence era, or are we still in machine learning era?
I think intelligence as a word is rather squishy. Right? How do you? There's the Turing test, of course.
Right.
And I think we're at the point where, AI can, under certain conditions, pass the Turing test effectively. If we're talking about GPT-4o or some of the other leading language models out there. Certainly, people are doing some pretty incredible stuff, both on the language model side of things, but also, if we're talking about image generation, making videos, it's really, now we're not only not able to distinguish whether we're talking to another human necessarily. I think if you talk long enough and you're really pressing, you can figure out whether you're talking to a language model or not. But, with movies, they're making, you're able to make photorealistic movies that, again, if you're, if you're just viewing a small bit of it, you may not be able to tell the difference between a movie that Hollywood produces and a short clip that's produced with AI. Mm-hmm. And so, that's one definition of intelligence, right? By that definition, I mean, I think we're kind of there, right? We're at the point where the Turing test, to some extent has been passed. There's a broader definition of intelligence, which, encompasses more critical thinking and that sort of thing. The language models don't think critically. They don't think the way, we think of thinking. So that's, I would say debatable whether we're, close to, I think we're certainly not at the point at which you could say we've achieved, general intelligence in AI.
So general intelligence is like AGI, they call it, artificial general intelligence. So that is the human level intelligence, right?
Right.
So how far do you think we are from that? Are we going to ever achieve it?
I decline to speculate on a specific timeline for that.
You can speculate on anything else, but not this, though.
No. I think this is really a tricky topic.
In your opinion, do you think we ever? I mean, this is more like a philosophical question, since you're a doctor of philosophy.
Technically speaking,
yes,
I am.
I really want to know is what do you think the intelligence is achievable at all?
I think eventually.
You think?
Sure. Mm-hmm. Yeah.
Well, it sounds scary.
Yeah. Well, yeah. I would say, there's I actually gave a lecture on AI. Oh goodness! Before the pandemic, I forget.
No, so it was way before the AI became hot.
Yeah. Well, it was. Curiously enough, I was in China, so I lived and worked in China for a while, and I gave a lecture to a bar association on AI. This was well before before the pandemic. Well before ChatGPT burst on the scene, and China's an interesting place to
talk about AI, and machine learning and spying over people.
It's an interesting place generally, right? And it's real different there. But one of the interesting questions I got from one of the participants was, should we fear AI, right? And my response was, 不用怕 AI, which was like in Chinese, no need to fear AI. And I say, 就是一个工具. It's just a tool, right? And so, and I still, I would say at my core, I think, I'm sure my perspective on it will change and adapt with circumstances and with the world around us and with the progress of AI. But I still think of it as a tool, right?
Well, I just heard some foreign language here besides English, because English is a foreign language to me, I guess, too. But do you speak Mandarin?
Yes. Depends on what you mean by speak.
Right.
Right.
Well, that's true. That's a good point. Being a linguist myself, I understand that speaking language, it means you have to be able to write, to create, to write an essay, and all this stuff. But I'm curious. You mentioned that you spent time in China, and you've actually given a lecture in China about AI. So, do you think there is a AI race between China and the United States, and what do you think is the role of government in AI?
That's a deep question, right?
It's a deep conversation.
Yeah. You've of course seen what came out of DeepSeek,
Right.
right? Which I actually talked on another podcast with a friend of mine who works in the AI space on that, which is an interesting topic. And
We'll have to drop a link below in description for that one too.
Yeah. And pardon the pun, but it's a deep topic. Certainly, China feels it's competing with the United States in AI, and obviously the United States feels that it's competing with China in AI.
But what does it mean, United States, though? Right? Like, is it a government that is interested to get into the AI? Because in China, as far as I understand, the government is competing, right? The government builds their own data centers. The government hires researchers and creates the models. In the United States, it's a little bit different. It's a free country, right? That there's more development from a private sector, like Microsoft and XAI and all OpenAI are building their own data centers. So what is the role of United States government here? Like, we're not going to step in and just build data centers on our own. I think other policies that's going to define the future of AI and competitiveness in the world, or what is it?
Well, I think that there are two fundamentally different views of the role of government in economic development and other areas, right? And I think the view of China among many people here is that of some sort of centrally planned economy, right? A lot of people have this mental model hearkening back to the days of, Stalinist Soviet Russia, right? And that's not accurate at all. I think if you look at China, it's a very nuanced picture that you get when you know kind of how things work well there. Even back in, I think, 1995, I've heard there was some debate in the Communist Party whether to continue to, call the party communist, right?
Really, that early?
Yeah, and they eventually decided, no, we'll keep it for a variety of reasons. But the economic system over there, is not kind of the centrally planned economy of Soviet Russia, right? It's very different. There is quite a bit of government participation in the marketplace, but it's also a very dynamic, competitive, capitalistic economic system as well.
So it's incentivized communism, kind of.
Yeah.
Would you call it that way?
I would say it's hard to characterize succinctly.
Right. Well, the reason I call communist, it's not only an economical society, right?
Yeah.
Communism is also the mentality of enforcing it's no freedom. Those parts, like communism, is not only central planning.
Yeah,
it's more to that. This freedom of speech is a big part of of a big enemy of communism.
But I think if you were to talk to people there, they would say the way you're thinking about it is not right. Right? Not to say I'm not saying the way you're thinking about it is not right, but different perspectives. Here in the in the United States, you've seen quite a bit of polarization in the way people view things.
Right.
With the information age. I would say the information age, you might even say, has been supplanted by the age of hype.
Right.
And so, you had people getting information by scrolling through their phone and, getting a constant stream of, clickbait farm, social media, right? And even here in the United States, you see people with very different views, right? And I would say again, like as an economist, my view is almost kind of orthogonal. I would describe it to the the prevailing political camps here. But there's you can't say that one camp is totally right about everything and the other is totally wrong about everything, or vice versa, right? There's something going on, on both sides of the fence. And so if you're looking at China, you're in kind of a similar situation where if you go and you talk to people there, you'll get a very different perspective, right? And they view, for example, if you're talking about, let's say, government intervention in the economy, in the United States, that's, to the more pure capitalists out there, the more libertarian elements, that's an anathema, wouldn't you say? In China, an economic miracle has happened where they have brought, literally hundreds of millions of people out of poverty, right, in the last couple of generations. It's been a very rapid, change in, the welfare and well-being of people in China over the last couple of generations. And so they look at this perspective, should we have government intervention or should we not have government intervention? They say, well, it's worked, right, so far. Right.
For those reasons.
Those
right,
and other reasons.
So I want to again, I don't want us to diverge from AI though, right? Like there's so many interesting things I'm sure we can talk about China, but in an AI era, the Chinese government is really competing with the United States. The number of power plants they are building to support the data centers is just astonishing.
Right.
And in the United States, we have a private sector. So private sector that invests in that, right? So do you think there is a need of government policies in the United States to expedite growth of AI in order to compete with China on global level?
I think there's a place for government. I think the degree to which they're hands-on or hands-off is subject of debate, but I would say there is a place for government in the ecosystem there. As economists tend to fall more on the laissez-faire side of things. I would say I personally tend to be a bit more laissez-faire, and I also while we're talking about, the distinction between the economic system that China has built and, the kind of Stalinist Soviet era system, one thing I do think about in terms of that Stalinist Soviet era economic development was that one thing that characterized that economic development was heavy investment in heavy industry. Including military, right? Not just military, but steel production, all sorts of other stuff, right? And I think they saw the advancement in their industrial capacity, as an advance in society generally. But I think economists in retrospect look at that and would say, well, part of the reason that that system ultimately collapsed and had to be changed was that they overinvested, right? So I think that it is possible to overinvest in these in areas of the economy, even if they're hot areas, even if maybe some subsidization would be appropriate. It's certainly possible to overinvest.
So I guess the subsidies is not something that the industry are looking for from the government. I think what the industry, AI industry, and I'll be talking about from infrastructure perspective, right? Building data centers, building electrical infrastructure.
Right.
I think what the industry would want is less regulation, because building a power plant right now is a total bureaucratic nightmare. You have to submit a bunch of permits, and you can't do it in every state, right? Like, for example, we sit with you in Chicago. If we would want to build a power plant on the outskirts of the city, it's impossible. But if we're gonna sit with you in Texas, where you from, we could build it in no time, right? So I think that's where the most important point of view should be from the government perspective. Because when we listen to politicians, they all talk about, oh, we have to compete with China. We have to compete with China. And when they call we, it means general mentality. It means America, right? And at the same time, the government, those politicians who have the keys from the House, they're not providing the policies clear enough for the market participants to invest in this industry, right? Like to invest into physical infrastructure, which is very expensive. So I have a follow-up question here. So in an example of you mentioned about Soviet Russia, that was where the government was investing a lot of money, and the whole country collapsed. That's a whole different story. But right now there is a massive amount of capital, private capital, that getting into data center space and into AI data center space. So would you stand behind the same thought that there could be a chance that they are over-investing? Microsoft, Google, all those guys, and it may buy back?
Well, let's think about another situation that's very similar. If you recall, in the late 90s, we had dot-com boom, and irrational exuberance, right? But I would say there's an open question that remains as to, among economists at least, as to whether that exuberance was in fact irrational, right?
So basically we got Google out of it,
Amazon
out of it,
right?
And there's some multi-trillion-dollar businesses that are the largest employers.
Yeah. And so certainly when you're facing a returns to scale, coming back to network effects and externalities, right? So trying to bring this full circle. If you're facing a network market, right? Economists would say the competition is not in the market, it's for the market, right? Because again, you'll have in a market where you have network effects and externalities, you'll have a dominant producer, and then you'll have a bunch of fringe producers. And each fringe producer knows that they could be tomorrow's dominant producer, right? And the dominant producer knows they could be tomorrow's fringe producer. And so there's an open question when all of this money is being directed to investment in that area. Is it irrational or is it not? Well, I think it's rational if you're in a network market to spend liberally, because your returns could be so great that it justifies a high level of spend even with a low probability of success, right?
But in this situation, the probability of success is high, to your point, because we already have a bunch of use cases in AI that are really increasing the economic value, because as you mentioned before, it is a tool.
Right.
Well, okay, I have another thing here then. The dominance in AI spending is limited really to a few players. That's Microsoft, Google, now it's OpenAI, companies that are called hyperscalers. So since it's a massive amount of money, how do other companies, smaller companies, can even compete with this amount of spending, or should they?
I wouldn't say that you should necessarily look at the hyperscalers as your benchmark, right? Or as your, measure of, success. in the marketplace. And this is, I'm speaking, in this case, perhaps more from personal opinion than from, as an economist. But, if
So it sounds like economists don't have their personal opinion.
yeah, well,
They should.
yes, they should. But everybody has a personal opinion,
Right.
right? Some express it more freely than others.
Right.
But I think in business generally, you've had success, right, as an entrepreneur, right, and you know how hard that is, right, and you know what a difficult road you hoe to get there, and you also know the travails that entrepreneurs must endure, and the optimism and the hope that they bring to the mix, and they have to bring to the mix. And I would say that is not misplaced, right? I think that, you look at the hyperscalers, and there's certainly a good reason that you have hyperscalers in today's market. It's because, there are significant barriers to entry, right? You have these models which are taking, hundreds of millions of dollars. I think I've read in some cases a billion plus to train. You saw some, tremendous efficiencies come out of DeepSeek, but still, I would say that's a topic for another discussion. The degree to which those reflect, reality, but the fact that you have these high barriers to entry for the language model producers and the other model producers does not necessarily mean that the ecosystem is going to all accrue to those producers, right? I think there's going to be a very broad impact to AI, and I think there's plenty to go around, right? This is not a pie slicing exercise. This is a pie expanding exercise, right?
Sounds like an example that big waves gonna rise all ships, small and big ones, right?
Yeah, I think so. And I think there's lots of room there for people to build value out of AI, whether or not you're building a core model or tuning a foundation model or whatever. There's just plenty of room to run here, and I think that we'll see that develop. As you saw the .com ecosystem develop, right? Certainly there were the big winners coming out of the .com era, but now everybody uses internet, right? We're on social media,
Right.
Right. So we are benefiting from the development of that technology,
And we're part of the social network.
Yeah.
Well, Collin, I can't wait to see your stealth startup coming out. I'm really curious what you're building there. Sounds like there's a lot of cool stuff. I want to thank you for this conversation. It's been amazing. There's a lot of cool stuff. I think after this talk, I need to listen to it, to compress it, and then I definitely would like to talk about more things with you, and that's going to be in the next episode. So meanwhile, where people can find you?
So you can find me on LinkedIn.
Okay.
If you feel free to reach out.
We're going to leave the link below.
Yeah.
You have to get a Twitter, man. You have to get an X.
I know. I need to. You need to school me here.
Yeah, we need more of those thoughts out there.
Yeah. No, my wife is much better on the social media front. I need to catch up.
I appreciate your time. It's been a pleasure to talk to you, and I'm looking forward to see what you have cooking.
Thank you for having me on.
Thank you very much.
Always a pleasure.
Absolutely.